Welcome, tax nuggeteers and nuggetees to FBT on Christmas parties and gifts. This event is brought to you by Tax Nuggets Academy. As usual, we're creating fun learning experiences for accounting professionals. I'm Joyce, for those that don't know me, and I'll be your host for today. If this is your first event with us, welcome and welcome back for all our nuggeteers. All our events are interactive. So, hey, Cameron, feel free to say hello in the chat. It is the festive season and I have, dressed up, but it is bloody 35 degrees. So I'm going to take it off now. It's just for show to do the introduction. And say hi in the chat. Get involved. There'll be lots of polls and quizzes coming up. We'll give you instructions on how to participate. And questions, please put them in the Q&A section, not the chat. I sense there are quite a few of us, 520 registrants, our biggest ever yet. Thank you. Thank you, everybody, for coming along today. If you want your questions answered by Judy, our instructor today, please don't forget to put it into the Q&A. And this session is being recorded. Replays are available for VIP and team subscribers. Let me introduce you to our amazing instructor for today. She is a director at BDO, specializing in FBT, super, and employment taxes within the tax division. Please put your emoji hands together to welcome Judy White. Hello. Oh my goodness, look at all the emoji hands. Yay! Thanks, everybody. Welcome, Judy.
Thank you so much, Joyce, and thank you for that lovely introduction. And so, yes, this is my first, so I really want to quickly extend a very warm thank you to Joyce and Vicky for inviting me to speak to you all today. So I will just bring up our agenda and let you all know what you're in for this session. And you'll just notice also that we will had hoped to take as many questions during the session as we can, but as Joyce has kindly mentioned, there's quite a few on today. So what we'll do is we'll try to take some questions. However, we may also end up needing to address those near the end of the session today. So we're looking at just a kick-off here, just to get back into the groove of fringe benefits tax, so do an overview, look at some exemptions. But we're really focused on the Christmas party. We're going to look at food and drink entertainment. Also, of course, need to look at some alcohol consumption for quite commonly at this time of year. We're also going to cover travel expenses that do relate to Christmas parties, recreation entertainment, and just when you've enjoyed, hopefully, all of that festive fun with all that entertainment, we do want to end off with Christmas gifts for this session. Lots to do. So I will just kick off for now and welcome you all and thank you for attending. So setting the scene, and thank you again to Joyce and Vicky for these fantastic little pics that I must give acknowledgement to here. We want to set the scene for you and have a bit of fun as we go through today. So you are working at Big Nugget Advisors, and very excitedly, you have received a phone call from Bella at your client, Twilight Proprietary Limited. So I hope you all are having a bit of a smile and a giggle there. You are most excited to hear from her, as Keeping Up with the Cullens is your favorite documentary of all time. And you secretly wish that you could be a vampire like her and Edward. So Bella reminds you that Twilight Proprietary Limited is in the business of providing merchandise and has a workforce of 100 people, of course, both vampire and humankind. So that is the scene for a bit of fun. So bearing in mind, we are doing FBT and Christmas parties and, tax today. So Bella does mention to you that Twilight provides some benefits to staff and is wondering whether you can help advise them on any FBT implications. You happily agree and await to hear further. And this might all give you a little bit of a giggle, but can we just say that we are presuming that vampires can indeed be employees under the FBT legislation? So for all our examples, polls and case studies, please just presume that that is indeed accepted as an employee. Would be terrific. So that is our scene.
So vampires, yeah, they still have to pay tax, unfortunately, in a good world.
Yes. I do think we probably should clarify that bit. Thank you. So starting off with what are fringe benefits, let's just do a quick overview here. So we're looking really for 4 key things. So a fringe benefit arises when a benefit is provided to an employee by an employer in respect of employment. So when we talk about employee, that does include their associates. And when we talk about employer, that can also include an employer's associates and third parties. Associates can include spouse and family relatives. So that is very important and relevant for Christmas parties, in particular where often a spouse or partner may attend with the employee. And what are the basics again? So a fringe benefit. So today, entertainment. So that can arise for entertainment. What is the definition of entertainment? You will be pleased to know is entertainment by way of food, drink, or recreation. Yes, entertainment is in the definition of entertainment. So therefore, you'll see a little, here we are. So you'll see, you gotta love tax. You'll see a little bit later on, we do have some slides where we have to delve a little bit deeper then into what does entertainment actually mean. Just like to bear in mind for now that it does include food, drink, or recreation, which we will also discuss through in our webinar today. And before we move on from there, it also does include, gets caught in is accommodation or travel in connection with that entertainment. So keeping in mind to look at the full picture for your costs in relation to any entertainment events, to include the travel and accommodation as well. And the different types of fringe benefits that may arise for entertainment. Look at all these. So gives you an indication of the complexity in this area. So the first box there on the slide, meal entertainment. So that is where fringe benefits are provided by way of food or drink only, and where the 50-50 method of valuing has been elected. We'll come back to that. If the 50-50 method hasn't been elected, then instead you'll have an expense payment, property, or residual, depending on the transaction. So these are just covering the categories of fringe benefits that can arise. Lastly, you can see at the bottom right there is not-for-profits. So today we are focusing on for-profit entities. There can be changes in the rules for not-for-profit entities, and the main item is the classification of entertainment as tax-exempt body entertainment. So otherwise today we will be focused on for-profit entities.
Right?
Great. So over to you, Joyce.
Got our first poll of the day. People, wake up, wake up. This question is whether morning tea constitutes entertainment. And Judy has kindly provided a little example here. So Twilight Pty Limited holds a morning tea on business premises for Edward Cullen's 110th birthday. Yay. Edward is Bella's husband and an employee of Twilight as well. There is a selection of human treats and vampire delicacies, which we'd rather not describe further here. So, get involved people, you can scan a QR code, or Assistant Nugget has just popped in a link in the chat. So feel free to navigate there, click the link, and select your answer. Can see 18 people have already voted. Thank you so much. Does the morning tea at Edward Cullen's 110th birthday constitute entertainment? Great. Shall we? So thank you for all those that have voted. About 60 of you. Yeah, such a good audience we have today, Judy.
Yes, absolutely. Getting in the Christmas festive spirit as well.
Shall we see the answers that have been provided? If you go to the next, yep. Oh, so I'll hand it back to you, Judy. If you want to provide some commentary on whether people got it right or wrong.
Absolutely. Thank you so much, Joyce. I love that someone did answer the I'd rather not think about it. But so, Joyce and I love that, I'm sure. We would suggest that no is the response for this one. But as we know, this is why we're all on as well. Tax is really complicated. So let me explain that what we're looking at here is a morning tea. So that is something that is not necessarily considered to be entertainment. So it's more along the lines of sustenance. So therefore, in terms of this particular situation, we would expect that they do not, it would not constitute entertainment. So that will be something to just keep in the back of your mind as an example as we continue through the slides to see the implications of entertainment and knowing that this sort of situation might actually not be entertainment.
Might take one question here, Judy, if that's okay. It's very, very relevant, I promise. Helen has asked. Helen is meant to put it in the Q&A, by the way, but it's a good question, so I'll take it. What happens if morning tea is at a cafe with a client?
That's a great question, Helen, and thank you for that, Joyce. One of the key areas to look at is where the entertainment is held. So what happens in that case is we have a risk, that entertainment is actually arises there. So we have a risk that could be the case. You'll see on a slide later a what, where, why, and when test. And the where, in my experience, does tend to have a fair bit of weighting. So once you do have a morning tea off the premises and out actually off premises, so say at a cafe, then your first consideration is that is entertainment and subject to FBT. Probably not a very popular answer, sorry to that one, but that's something to bear in mind, yes. And just, of course, the employee portion, the client portion, wouldn't be subject to FBT. FBT is a tax on employment. However, there is a 50-50 method that might make me have to change that response, and we'll come to that a little later.
Yeah, and presumably we can treat that as minor benefit if we use the not the 50-50 method.
That's great. Yes. So then you would go through the process of checking what the FBT implication is. Minor benefit, absolutely, less than $300. The only thing, and Helen, it sounds like it might be a bit more one-off there, so absolutely minor benefit. However, the only thing is if there's infrequency, irregularity is what we need for a minor benefit exemption. So if, in fact, these catch-ups are occurring more often, and we're talking about the employee point of view, so there could be different clients at different times. So we're just tracing the employee's point of view. If they are doing that regularly, then unfortunately the minor benefit exemption wouldn't apply after all.
Great.
Joyce, I might just also extend that at the moment to the Q&A there. So that is a great question too, Helen, about what if the business does not have a premises. I'm actually getting that question a lot now. So in that case, in my opinion, the where part of that why, where, what, when kind of analysis that we do to determine if entertainment has occurred or not, the where has less weighting in that case. So where there isn't a business premises and effectively you would need to conduct those activities off premises, then I think you have a better argument. Unfortunately, it is subject to your facts and circumstances that you'd have to weigh up at the time, but that definitely would need to readdress whether entertainment actually occurred there. And also, I did notice, yes, so the minor benefit is $300 per occasion. It's not actually per year. Again, that is a great question. Thank you to Cameron, who's asked his minor benefit $300 per year. So just answering that, I do get that a lot as well, thinking it's an accumulative type threshold, but no, it is a per benefit threshold. Thank you to Cameron on that one. And lastly, I can see one more question, so I might take that before we move on. From Anthony in the Q&A, thank you. Is an exempt minor benefit tax deductible to the employer? If it relates to entertainment, no. If it doesn't relate to entertainment, yes, which might give us a good segue into the next slides. So thank you, everyone, for kindly raising some questions. We really love to hear from you. Okay, so I might go back to the slides then. So we're now just covering off, before we go too much further on GST. So we'd like, as a goal today, to talk about the interaction as well with other taxes, not just on FBT, because that's very relevant with this area, especially with Christmas parties and gifts and that at this time of year. So in terms of the interaction with GST, so if the employer is registered for GST, they might be entitled to GST credits. This may not apply if it relates to a GST-free supply, for example, health, education, or input tax supplies such as financial supplies, where there is actually no GST in the price anyway. So if the employer, if there is GST in the price, the employer is entitled to a GST credit. If that occurs, then the higher gross-up rate applies for FBT purposes. That's the type 1 rate rather than type 2 rate. So what we're just saying here is that when you do FBT calculations, there is a gross-up required, but there's two different rates. So where there is GST in the price, it's the higher rate. If you can claim GST credits, you claim the GST exclusive amount as an income tax deduction, again, presuming you can do that. Entertainment may be non-deductible, which we talked about with that question in the Q&A. And if that is the case, then the GST credits can't be claimed either. We will come back to this. We do have some slides that cover GST, FBT, and income tax interaction. So that will be something that we can bring this all together in the presentation today. And what about the fringe benefit? What about when the fringe benefit relates to entertainment? So in that case, if it did not have FBT paid, so for example, an exemption applied, again, we did just touch on this, then in that case, and it's entertainment, then it will be, we have to think about the non-deductibility for income tax purposes. And when it's not income tax deductible, there's no GST credits. So I think I've mentioned that a couple of times, so I might move on from that now, and we'll revisit that as we go to some examples where I can actually demonstrate the interaction of that. And just also briefly, please bear in mind that if employee contributions are made, that GST can apply to those as well. There are instances where GST does not apply. That's when it's not a cash contribution, it's paid to a third party instead, say like for petrol to the petrol station. And of course, if there's no GST in the price or the employer is not registered. Benefits exempt of fringe benefits tax. So we want to just run through a couple of examples of exempt benefits that do relate to entertainment in particular, and those benefits where they're exempt can't be a fringe benefit. So benefits exempt, we again have touched on the minor benefits. So that's section 58P of the legislation, and TR 2007/12 is the relevant tax ruling that can provide a good reference and examples. So what is the minor benefits exemption? I just want to touch quickly on a couple of the key features. So this is the one that where the benefit is less than a threshold, and that is $300. So we have a threshold test, and we also have a test where it needs to be infrequent and irregular together with any associated benefits. So those are two key features before you will qualify under the minor benefits exemption. So let's go back to Twilight. Bella has phoned back to ask you about the Christmas party. Twilight Proprietary Limited is planning to hold a Christmas party for the human workforce at a local restaurant. Per head costs $250.85, with each employee bringing a spouse and or partner along. So what do we need to think through here? First of all, we will be thinking, well, is that party subject to FBT or not? And are there any exemptions that we could use? And what about the fact that the combined amount is significant with the employee and the spouse? Does that make a difference? So just touching on that, we would look at the minor benefit exemption. It is a per head cost, so it is less than $300. So that's great. It's okay that the combination with the spouse is higher than the threshold. It is a per head cost.
Yes. Can I just check? Less than $300 inclusive of GST, correct?
Yes, correct. Yes. Yes. And again, that's another great point. Thank you. Because often we get this information from the computer systems records, yes, and the GST is already being removed if it did apply to that benefit. So that is something really important.
Yeah. So hopefully that answers your question, Mariano. It's 300, which includes GST. So if you see 300 in your accounts, it's likely that if you see 299 even, it's ex GST. It
won't qualify.
It won't qualify.
Mm-hmm.
Thanks for the help.
Oh, you're very welcome. Thank you for your help. It's just lovely. Terrific. So, great. So I might just keep going for now. We do have quite a bit to cover. So now we started to talk about benefits exempt. So I might just also address that we have another common exemption in terms of business premises. So entertainment provided on business premises, food, drink provided to employees on business premises on the working day can be exempt from FBT. So that doesn't have a threshold. Okay, so that's one of the key features there. So it doesn't matter how much the per head cost is if it's provided on business premises. However, you can see a but coming if there are associates there. So if spouses, partners, for example, did attend onto the business premises, then it doesn't apply to them, only the employees. So then you'd have to look at, say, the minor benefit exemption instead. But that's still a handy exemption for employees where it's on business premises. And to round out, this isn't actually technically an exemption, but the otherwise deductible rule can potentially have some application to we couldn't sit on an FBT type presentation, I don't think, without the presenter covering a little bit on otherwise deductible rule. So just bringing that one in. So employers will not have an FBT liability if they give an employee benefit that the employee would have been able to claim a tax deduction for if they hypothetically had paid for it themselves. So that means the taxable value is reduced in that case for fringe benefits. Again, there's a little bit of a but coming. There are declaration requirements for that. So that just is essentially to record what that deduction percentage would be. Now, if it's fully deductible, then that would be 100%. There might be some instances where there's only a portion that's deductible, and that allows that to substantiate that portion to do that.
Great.
Sorry. Over to you, Joyce. Thank you.
Great. So this question is about whether subscription payments are subject to FBT. So Twilight Pty Limited has paid for Bella's annual subscription of $900 to Vampire Business Association that provides her with an accreditation as a vampire business person, whatever that means. This association provides training programs so vampires are licensed for selling their products and services to human beings. This is necessary for Twilight's operations. By the vampire employees. So the question is then, is that $900 subscription payment subject to FBT? And your options are yes or no, it is an exempt item, FBT item. No, due to the otherwise deductible rule. Or no, I'm too scared to tell a vampire they have to pay FBT. Great. Thanks, people, for voting. Same link as before or the same QR code as before. We got already 70 people voted. Let's see what they have said. Ooh, yep. A very clear winner here with almost 90% saying, no, it's not subject to FBT because of the otherwise deductible rule. Is that correct, Judy?
Yes, well done, everybody. Yes, in this case, that would be an example of otherwise deductible rule. You can see we've tried as best we could. We've still hopefully having a bit of humour there to link that back to an actual business related expense. So that is the point where you do have a situation where there is business use or income producing use there that we can actually use the otherwise deductible rule. So that is an example of that, which I think we got a good amount of you that was on that page. So that's great. Great. So thank you everyone for participating in that. It's really great to get that feedback. So I might just also move now on to Christmas parties, a little more focus on that. So we do want to now bring in a little bit more the interaction with income tax also. So again, this can be quite complex. Don't worry if you're thinking there's a lot here with involvement with FBTs, also interaction with GST and income tax. So let's work our way through some of these issues because they all are interrelated with each other, but FBT is the first step. So Christmas parties income tax deductible only to the extent that it is subject to FBT. So we determine whether FBT applies or not. And if FBT does apply to the Christmas party, then that will actually make it tax deductible. If FBT doesn't, then it's not income tax deductible. So the costs of entertaining clients, though, are generally not subject to FBT. So they will always be not deductible. So I'll just step back for a second and explain. Broadly, the way I view this is that in the income tax legislation, step one, no tax deduction for entertainment. So we have that one uppermost in our mind. That is our base step one. However, step two, was FBT paid on that?
Yep.
And if it was, it's now deductible. And we're just talking about entertainment. And may I also just say at that point, it's GST creditable as well. Okay. So you can see that interaction between the two. Now, you might have noticed I said if FBT is paid on it. So that's not technically what the legislation says. That's what you need. So if you do look at the situation in the FBT legislation and determine that it's exempt, well, that means that no FBT was paid on it. You do need it to have actually had an FBT liability. If it's exempt, then that means that it will remain non-deductible. So entertainment is one of those particular areas where we do need to track both the FBT implications and then also in the income tax return and in the business activity statements as well for the GST. A Christmas party provided to current employees on a business premises or work site on a working day may be an exempt benefit. The costs of associates attending the Christmas party is not exempt unless it is a minor benefit, which we have just discussed on the previous slide. And Christmas parties held off the business premises will generally trigger a fringe benefit, again, unless it's less than $300 per head and a minor benefit exemption can apply. So I thought it might be easier if we just include some examples, and hopefully you can also keep these handy so that if you have situations, you can look up perhaps a table and then you'll have guidance. And you'll see that as we go through the next slides, particularly on the gift slide as well. So just to recap and give you some examples here, the top of this slide is the when the Christmas party is held on the premises. So if in that situation there are only employees, then the on business premises FBT exemption would apply to that. If associates now attend and the cost is less than $300, let's say it's $180 per head. In that case, we'd probably just look directly at the minor benefit exemption. Technically, the business premises exemption still can be used for the employees, but we know it can't be used for associates. However, it's less than $300 per head. So we still have an exemption available for the full event in that case under the minor benefit exemption. And lastly, you can see what if it's over $300 a head. So we know no minor benefit exemption now. So what does that mean? We'll go back to the on business premises exemption for your employees. However, FBT will apply to the associates. And if there are clients there, generally no FBT applies. So we're talking about the actual method here, and we will go into the 50-50 method a little later. And then on the bottom, we've now looked at, which is, of course, quite common, is what if it's not on the premise? It is our off-site, for example, at a restaurant. In this situation, we don't have the on business premises exemption anymore to consider. So the exemption that is relevant is whether the minor benefit exemption applies or not. So you can see if we have employees only and it's less than $300 per head, say $195, then the minor benefit exemption can apply there. If there are associates as well, that's actually fine. So the minor benefit exemption can still apply. Again, we are on a per head basis. So if it's $180 per head, that's less than $300, and the full event could come under the minor benefit exemption. And lastly, let's take the per head costs up to over $300. What happens now? Unfortunately, no exemption at all. So FBT would apply. If there are clients there, though, no FBT for clients. Again, this is based on the actual method, and we'll look at 50-50 a little later. So that is just hopefully a wrap of a few slides that we've been through now. That gives you potentially a guide to pull that all together.
That's great. So again, just wanted to mention, your question, the answer to your question was back there. So I'm gonna treat your question as answered.
Great, thank you. And I will might need to actually come back to some of the questions. Joyce, please continue to let me know any of the particularly relevant ones as you have. Thank you so much that are coming up as we talk. And we will, however, answer any others that we haven't at the end as well. So don't worry if we haven't answered some of your questions, Joyce, and I will revisit those at the end. If that sounds okay with you, Joyce, as well, to continue
Definitely.
on. Oh, terrific. So quite a bit of content I would love to explain and get through as well today. I think we've got just over 20 odd minutes to go. So I will just also mention before continuing on with gifts shortly as well. Can I just also say we'll also talk about alcohol soon and recreation. But what if you don't want FBT, which possibly most people do not want FBT? Is there an alternative to that? So let's just have a quick look at what if cash was provided instead of a benefit. So if we have an accounting firm that usually has a Christmas party for employees to thank them for their hard work throughout the year, the cost per head of the party is $350. So no minor benefit exemption would be available there. The employer has always paid FBT. What if instead there was a change of policy, no Christmas party, and instead a cash bonus of $350? And you'll see what's happening here is that the tax liability is shifting now to the employees instead. So they are the ones that would be taxed. So that would be the PAYG withholding system. So the tax that applies to salary. So the employee would pay tax. The employer, the accounting firm, would not have an FBT liability. So that's something that I just wanted to give you to think about. However, another but coming up, I do apologize, with income tax and tax generally and FBT, et cetera. There's also a super guarantee tax, if you like, there that can apply. So there might be other on-costs once you do replace fringe benefits with cash to bear in mind as well in the scenario. But that is just another option that might be available to work through. Now, this slide, I'm going to pop this one up all together, if that's okay with everybody, because there's quite a lot. And all I'll do here is just focus on a couple of high-level things, and then we'll keep on going. So this is the why, what, when, and where test this is coming from taxation ruling 9717. Some of you might be quite familiar with that one. It does seem like a while ago, but it's still a very relevant authority and guideline, if you like, in this area. And it is, that ruling is there to help explain the meaning of entertainment. So why the food is provided, that is generally in terms of the reason behind it, like a function or not. What is it, elaborate, or is it finger food that might be considered sustenance? When, during work hours or not, and where, on the premises or off the premises. So you basically in practice look at all the four. One doesn't necessarily have more weighting than the other, so you look at them all together. But as I alluded to before, the where one does worry me a little bit in practice. It does seem that can have a bit of weighting, and certainly when I've been on ATO webinars, once it's off premises, there does seem to be that little heightened risk that entertainment could in fact apply there. The question earlier was great though. What if you don't have a business premises? That can change it. So you can see this is very fact and circumstances related. And that's again why we're here today presenting to you because of those complexities there. This is the slide that I have alluded to a couple of times today already. So I just wanted to mention that there are different valuation methods for meal entertainment. So that's your entertainment by way of food or drink. So first of all, we refer to this as the actual method. So it doesn't actually say that in the legislation. It's actually what you do. So in practice, we talk about that. You have to actually work out who was there and how much it was per head and whether it was on premises or off premises. So that's quite broadly referred to as the actual method. And depending on the transaction, that can be an expense, property, or residual. There's an alternative method. This wasn't in the FBT legislation when it came out in 1986. It was brought in later, basically in response to the general outcry of the amount of compliance, costs and efforts that was required to do that actual calculation. So a 50-50 method was brought in. What does this mean? 50% subject to FBT, 50% income tax deductible, and 50% GST credit. So the idea is, imagine in an ideal world where you have you go to the general ledger, pull the entertainment account, ideal world that all the entertainment has actually been coded to the entertainment account, and you don't have to worry about doing any further analysis. So I just want to mention quickly, there are a couple of consequences of that. One is that you don't have any ability to use the exemption. So minor benefit exemption is not available, and on business premises is not available. And secondly, clients are actually called, which is not noted on that slide, my apologies, clients are also caught up in that, which is very unusual since FBT is meant to be a tax on employment. So you go to the general ledger, you pull that entertainment account, and you don't have to worry who it was to. Doesn't matter if it was a client or not a client. You don't look at that. You don't have to worry about where it was or anything like that. It's a compliance measure, and that hopefully will help you to understand why there's those particular disadvantages, if you like, around no exemptions, and clients are brought in as well. And lastly, again, just to acknowledge there are different rules for your not-for-profit clients and organisations there. So they have different rules. They have tax-exempt body entertainment, and one of the major implications of that is very limited use of minor benefit exemption. Alcohol. So what if alcohol is there? Does that mean automatically it's meal entertainment? Not actually necessarily. So again, one of the prevalent areas here is Taxation Ruling 1997-17. So essentially it says that if the alcohol is incidental, then that does not necessarily mean that entertainment arises. So that's some good news perhaps for all of us, that it can almost be considered sustenance if it's incidental. So good. So some good news, yeah.
That's
good. To bear that one in mind. So just a glass, everybody. Once the bottle is finished, that's probably going a little too far and no longer incidental, but we can work with that. And also this side here, again, I'm just going to pop this one all up at once because there's just one key point here. And I think there was a question up in the Q&A that I might have noticed earlier. So just to clarify, I want to clarify two things. First of all, that the travel and accommodation is brought into the entertainment event. So please bear in mind that travel, that can include things like taxis. Okay, so that's very relevant. So that means for the $300 threshold, for example, you do need to take into account any related travel such as taxis as well. And so that's really important to mention. And that's really the key message in that last right-hand side point there. So recreation, this slide here, again, I'll just start popping this up here for you, which has some examples of various items that would be considered to be recreation. So that includes amusement, sport, and similar leisure type activities. Again, you would bring into the analysis, the accommodation and travel as well. And the main point too that I'd like to mention before, in case I don't later, is we talked earlier about the 50-50 method of valuation for meal entertainment. That does not extend to recreation. So unfortunately, that means to be careful that recreation isn't involved and that's not actually going to be able to use that method. So just something I want to make sure I mentioned there. And the vampire games. So I might just wanted to give you all an example here in terms of recreation. So let's just imagine ourselves here that we're back on Monday morning, trying to get in and settle into the working week. And you're pleasantly surprised to get another call from Bella of Twilight Proprietary Limited, another FBT question. So Twilight is planning to provide reserved seated tickets to all the vampire workforce to watch the upcoming annual Vampire Games. Very anticipated event on the cultural calendar. Cost $320 each. Some of you might be keenly eyeing there that we are over $300. So our minor benefit exemption, unfortunately, isn't available here. So we are looking at it being subject to FBT. And again, I just had that point there to help remind me to make sure I had mentioned again that Bella might be saying she thought the 50-50 method might be available, but unfortunately for these tickets, that's not actually the case. That's in terms of if we're referring to the meal entertainment method, unfortunately there. So that leaves me pretty much with Christmas gifts now to get through. So I'll just double check in with Joyce for a moment because we do have about 10 minutes left. So Joyce, are you happy for me to go through the slides and finish up on time, and then we come back to the Q&A?
Yeah.
Oh, terrific. So just letting everybody know that we might be going over that time and very happy to take as many questions as we can. So keep them coming in the Q&A box. So in the meantime, I will just talk a bit about Christmas gifts. And this is also very relevant to this time of year. So let's say that we've got a gift here to an employee at Christmas time. Again, the minor benefits exemption may apply here, and so particularly if it is less than $300. If a Christmas gift is provided by an employer to an employee at a Christmas function, The gift will be an associated benefit and must be considered separately though. So if both the Christmas party and the gift are less than $300 in value and the other conditions of minor benefit are met, they will both be exempt benefits. So what are we saying here? And you might notice sometimes my language might be a little bit less decisive, may be, I've said a few times here, so I'm sorry. Can I just mention, not forgetting that we do have other conditions for a minor benefit. The other really common condition is the frequency and regularity. Now, that applies to not just that benefit, but to associated benefits. So you will have to, again, go back to facts and circumstances to work out whether the minor benefit does apply and to look at those associated benefits to take care. If there's been many gifts throughout the year, a gift every couple of weeks might be nice to get from an employer, as well as the Christmas gift. You might find that gets associated together and the regularity or the infrequency can become an issue. So just having to be a bit careful around all those different issues to bear in mind as well.
So can I ask the question on that issue with the gifts? That they both be, if a gift is given at the Christmas party, then they'll both be counted towards the $300 threshold. So just give the gift before the Christmas party, like the day before?
That's a good point.
As a strategy?
So that is a really good point. So what we did mean by that slide was that you do look at them separately, and a party is unlikely to be associated with a gift. Now, I shouldn't have said unlikely.
Okay.
Will not be associated. Yes. And can I just make a quick comment about that too, Joyce? Because again, when the minor benefit ruling came out, taxation ruling 2007/12, it clarified that. So it clarified that they were considered separate, not associated.
Right.
Which is great. Yes. Now, before that, they did exactly what Joyce is saying there. You would make sure in practice the gift did not come on the same day as the Christmas party. So some of you may recall that if you were practicing in that particular point in time. So thank you for raising that.
Sorry, I misread that. Yep. So they must be considered separately. Yeah. Great. Okay.
No,
Okay, it's quiz time. So, Bella at a twilight is considering providing her husband, Edward, who is also an employee, with the special vampire endorsed sunglasses costing $280 for his birthday. And so would the sunglasses be subject to FBT? 27 have already voted. Maybe let's give it another 20 seconds. Quick, get your votes in. Click the link in the chat or scan the QR code. Given we're running out of time, Judy, why don't we have a look at the answer?
Let's do that. Oh, wonderful. Okay, now I'll just mention, so we are looking at no, that the minor benefit exemption would apply to that. So this was for his birthday. So I can see there was a few perhaps a few answers there for the otherwise deductible rule. The context is for his birthday, not necessarily for whether he is able to, say, utilize those in requirements that's right, like protective clothing type thing that can extend sunglasses. So sorry, that was the context. So that might help explain why we are saying minor benefit exemption there, less than $300. And so you do look at every birthday gift and you are able to assess whether there's an exemption such as like the minor benefit exemption. Great. Terrific. So that leads us just now to look at just a couple more slides here as a wrap for the session. Here is we've got gifts to employees, and then I've also would like to look at gifts to clients. Now, the idea of these next slides is to give you some more examples, again, something you might be able to have close by so that you can see all the interaction at one rather than having to go through in your mind all those steps that we've been through today. So I was hoping to cover a range of very common gifts here that might give you that sort of ability to look at this and get your answer. So first thing I'd just like to do is remind that we are looking at employees at the moment, and we're just presuming that there is an infrequent and irregular basis here, as you can see on the bottom of the slide. So we do need that as well to be present before we can conclude that the minor benefit exemption applies. Can I also point out the first 3 lines there are all not entertainment, and that is the key that then tends to result in the other columns there. We do need to look at whether the minor benefit exemption applies as well. So it's really those 2 columns, entertainment or not. Then you move on to minor benefit exemption or not. Depending on those 2 answers, you'll then know the FBT, income tax, and GST implications of all of that. So the first 3 are not considered entertainment. And examples, Christmas hamper, a gift card, and a bottle of wine. So the reason is that they have an enduring benefit. So I joke often that if my employer gave me a bottle of wine, okay, and I took that home and drank it later, that is not entertainment. However, if I decided to pop that open, share a couple of glasses with some colleagues here, I have changed the nature and I'm now being entertained. So that, I think, is a really good example of what we're talking about today, of the complexities in entertainment. And hopefully we're addressing some of those complexities and giving you some practical tips and examples and information that you can help to work through these. So the first 3 lines are not entertainment. And secondly, whether the minor benefit exemption applies. Once we have a gift that is over $300, which is in the second row, that now changes things. Okay? So if I just talk briefly on the first and third row, less than $300 and not entertainment, ideal. Ideal situation, because in that case we have no FBT, we still get our income tax deduction, and we still get the GST credits. Once it goes higher than $300, that changes things because we will now have an FBT liability. So not as great as the first and third rows in terms of tax implications. So FBT will now apply, but because FBT applies, we get some ticks on the others. So not good FBT, good tax deduction GST credits is straight. So we've got FBT apply. My apologies. Can I just re-say that again? So I started to move on into entertainment. So can I just re-say that again? Say that again. So secondly, once we have the over $300, we don't have the minor benefits. So the only difference between the first 3 rows there is the FBT implication. So apologies. I will now move on to the entertainment. Once we have entertainment, we then look at whether the minor benefit exemption applies or not. And you can see that those 2 columns are the important factors that we need to decide first. So once we have entertainment, unfortunately, you'll see in the bottom line for the movie tickets and a couple lines up for the golf club membership, once we have entertainment, even though we can use the minor benefit exemption, so no FBT, unfortunately, we can no longer get the tax deduction or the GST credits. So I think we are on time now. So if I may just mention the gifts to clients slide and give you a couple of takeaway points here is once we have clients, now we are assuming it's the actual method here, not the 50-50 election method. Sorry, I'm talking about gifts. Yes, I apologize. So I just wanted to make sure that we are looking at gifts, okay, and we are looking at, well, that would be the actual method. Sorry. So in that case, again, it's the same issue in terms of entertainment versus not entertainment. You'll see that the minor benefit column there and the FBT column there for the whole range of examples is all going to be no, which is a good thing. So no FBT applies because we do have clients. And now, getting back to what I was starting to allude to before, is just the entertainment now. So where there is entertainment, obviously FBT is still the same scenario, but you will notice that out in the right-hand side that there is no income tax deduction and no GST credits. So just a couple of high-level points, but it's something you might want to take away, absorb, have a look through the gifts, run your eyes over the other columns, and hopefully that gives you a guideline in future. So I will just end the discussion now on the slides. And Joyce.
Amazing.
Hi. Now, I haven't been keeping an eye on the Q&A as much. So, Joyce, would you like me to start going through those now? Or
Yeah, all good. But before we jump into the Q&A, for those that need to run or those that are still around, feel free to rate us. We have just popped up a poll. Let us know how you thought we went, given it's Judy's first event with us as well. I'm sure she'd love to hear what you thought of today, as well as any future topic suggestions that you want Judy to cover. That would be great. Thank you. Yes, Judy. So feel free to go through the Q&A. We have almost 30 Q&As, so you can be selective if you want to, given we've only got an extra 15 minutes. But I'd actually suggest starting from the bottom because they tie in with the tables that you've just been talking about. So there's some people that could have some questions about the tables.
Yes, yes, absolutely. So that would be great to have those questions on the tables, and hopefully that has given people a chance to have a look and actually question that. So great. So terrific. So I will start from the bottom up, and Joyce, just jump in at any time if you'd like me to change that approach. So I can see the question there from Jenny. What if you buy movie tickets for clients to generate future referrals? Would this make it tax deductible? Okay, so the nature of the movie tickets won't change if you are looking at some type of promotional type activities, for example, with the future referrals. So it would not make that tax deductible, no, unfortunately. Cool. And again, as I go through, and Joyce, just let me know if there are any responses. So as I go through those, if there is a follow-up question, please let us know too. But I'm going from the bottom up, so Joyce can help me to come back and pick up on any follow-up questions as well. So just going now to Catherine. Is there any type of cap on the amount spent on a gift card for a client for it to continue to be tax deductible? Okay, so there is no cap in terms of a gift card being tax deductible, because a gift card is not entertainment. Okay, so it will always be tax deductible. Yeah. Okay.
So, which is why Tax Nuggets sent out a whole bunch of gift cards to our instructors just the other day. You're like, it's the most tax effective gift ever.
It is. I'm very proud. Very proud to hear that. That's great.
And also put in a cheeky thing. It's like FBT free, tax deductible.
Oh, amazing. So there you go, everybody. A live example of the question and what to do. Yeah.
Not for your employees. Your employees,
for clients in this case.
FBT. Yep.
Yes. So again, if we do look at that, if it is an employee instead of a client, again, a gift card is not entertainment. So can I also clarify? So when we say a gift card is not entertainment, we just be a little bit careful that recreation hasn't occurred, and that there is recreation on some of those examples there. So say it's for travel, for example, and you might be thinking that's still like a gift card, but it's actually a travel voucher. So that is actually recreation though. So can I just say, just take a little bit of care in case that gift card would actually amount to recreation, because the recreation is different to the food or drink, and that would actually be considered recreation and therefore entertainment. So there's a lot of joining the dots there. So there's looking at, if it's entertainment or not. And just, again, that's why we did have some examples on those slides, which might have been recreation type items.
So I might just ask this question from Sumuru. He or she, apologies, Sumuru, has asked, what's the basis of an F plus card? Not falling under entertainment. Is it because it's generic and it's not, say, entertainment specific type of card?
Exactly it, Joyce.
Great.
Exactly. And again, it's that kind of enduring benefit type of item, but just taking care of your recreation though, because that can be different. If you have a travel card, you're using it later, that can still be entertainment because it's recreation, not food or drink. So in the meantime, I'll just see if I can then jump in here and have a look at some of the other questions. So I think, let's see, I'll just might hit to the bottom there again and start my way back up. So from Anthony, if buying wine for a client, but you are buying, say, 5 bottles of $100 wine because there are 5 partners in the business you are buying for, is it 5 lots of $300 exempt benefit cap? Yes. So it is. So
wait, is this client or is this client? Employee?
Yeah, that's something we might just need to clarify there. So let me mention in the meantime that if it's clients, you don't have to worry about the minor benefit because there's no FBT. So if we just presume for a moment, let's put our own facts in there, poor Anthony, that they're actually employees. So if they're employees instead, you do look at it per employee basis. So $100 each would actually be under the $300 threshold. Oh, great. Thank you, Anthony, for commenting there. So again, I know we're really close to time. I just need to double check with Joyce. Are you happy for me to keep selecting questions, or if you already had an opportunity to pick a sum that we should?
Try to select as you go, but I would just say keep scrolling up because people keep adding questions to the bottom. And we need to sort of take care of the ones that ask some initial questions as well, and not just the last minute ones.
That's great. All right. Well, I might just scroll up for now to when we finished before and take those ones and then see what time we have left. So I can see a question there from Neil. Is a membership of a sport club paid monthly at $40 per month mean that it is under 300 or does one need to accumulate it over the year? Well, first of all, you don't accumulate it. You do look at each time. So that would be under 300. There's a bug coming again. Sorry, Neil. That would be considered frequent or regular. So I would be concerned that the minor benefit exemption wouldn't apply in that case. Alison has a question. Think there is no GST on gift cards, so no GST to claim on these. Is this right? That's a good point. So that would be in that situation, there wouldn't be any applicable GST. So that's right. Yes, thank you, Alison. Now let's see, Gamesh, I think there. I hope I have pronounced that correctly. Would a networking event cost where food and drinks are provided along with a presenter be subject to fringe benefits tax? That is a great question. We haven't talked too much about promotional events as yet. So what happens there is you do go through your normal analysis in terms of the food and drinks and look at why it's held as a networking event and where is that on premises or not. I'm guessing it may be off, but just in case, that might be a component as well. And why, when, the time of day may impact on that as well. So these are the sort of things that you do go through. But can I just say that the what there, if that is generally sustenance, so especially compared to the time that people are having those that food and drinks, there is a possibility there's no FBT. So in answer to your question, would it be subject to FBT? Unfortunately, it does depend. You would have to go through that analysis. I think we've covered a couple of these questions.
Can I choose one question from the top?
Of course.
Just a slight change to all the entertainment ones. Ken from Kaz, can property benefits be provided every day without FBT implications? For example, lunch provided on the premises to staff working every day, on every working day.
Okay, so the answer to that is actually yes. So I don't want to confuse everybody in terms of frequency and regularity. What you've got there is you don't have a fringe benefit. So if that's like a light lunch, that's like your morning, afternoon teas. So if you see, there's biscuits, for example, in the kitchen every day, that kind of thing. So that is considered to not be like a fringe benefit. Yeah, yes, and I know that that's can be hard to put all this together. So what I think in my mind is that's more of a business expense in that case. Great. So I guess we could probably take just one or two more questions. Is that right, Joyce?
Mm-hmm.
So
I'll let you pick.
Let me pick. Oh gosh, I'm sorry everybody if I'm missing some really great questions here. I can see a question from Karen. If we elect 50-50 method for all meals provided to employees, but light lunches, food and drink that were provided to employees in the office each week and not elected as meal entertainment would be exempt under property fringe benefit. Is that right treatment? Okay, so firstly, the property benefit that's I assume you're referring to the on business premises one, so that doesn't apply when you use 50-50. So I just want to make that point. But secondly, remember the 50-50 method is for meal entertainment. So as we discussed before, the light lunches of food and drink wouldn't actually be, if they're not considered entertainment, then you don't have to pull them in. So the first thing with 50-50 is to be very careful to actually look at your pool of expenses and just check that they are indeed entertainment.
Yeah.
Did you want to pick one more, Joyce?
Our first example on the morning tea at Vampire Twilight premises. That is not entertainment.
Correct.
Great. I was just going to put in, simple last one. Is Uber considered subject to FBT?
Yes. So Uber is considered the same as a taxi now. There were a few years where Uber technically wasn't within the definition in the FBT Act as a taxi, but that has now been changed.
One more, is it okay? Can you give more examples of where alcohol is incidental and not subject to FBT? I'm particularly interested in this one.
Absolutely. So there were spate of private rulings there for a while where there was a light lunch provided and you could have a glass of wine. Okay. Or beer. Yes.
Right. And so one glass is
one glass is what those rulings did indicate. Yes, unfortunately not anymore. So I guess that's to clarify what incidental might refer to. So it was considered that that alcohol being present with the light lunch didn't change the nature into entertainment.
Yep. Great. Thank you so much, Judy. Oh my goodness, we have like over 200 people still online staying this far out over time. So thank you everyone for staying back as well. So what we'll do, me and Assistant Nugget, we will go through your questions. And if there are any like questions that was not covered in the slides today, we might just pop it down in the comments section of the replay video and get to you and hopefully with Judy's help as well. But we'll have a chat with Judy. Great. Thank you so much again, everybody. And one just final key takeaway from yourself, Judy. If there was one thing you want the audience to remember today, what would that be?
Yes, that one thing would be that when you have a minor benefit and have used the FBT exemption, if it is entertainment, then you bear in mind the non-deductibility and the no GST credits. If it is not entertainment, you don't have to worry. So if it's a gift, which isn't considered entertainment, you don't have to worry about that. It's just if it's entertainment. So I think that is probably a key takeaway.
Amazing. Thank you again, Judy. And thank you everybody for attending and being such a wonderful audience. Please put your emoji hands again to thank Judy.
It's my pleasure. Thank you, everyone. Thank you, Joy.